Meantime, the president of the UAW holding a Facebook Live event right now. We're currently collecting the headlines, but in the meantime, joining us now is Tom Narayan, a global auto analyst in RBC Capital Markets, and Anne-Marie Utz. She's an attorney at Foley and Lardner, represents auto suppliers based in Detroit. Let's go to Tom first, if we might. What are you sensing on where this strike is, how close or closer the parties are to an agreement, or by contrast, how it might expand and to where and how soon?
Yeah, I think, we're in week 3 of this work stoppage. 2019 one was 6 weeks, right? I think that's a great reference point to use. And we have been getting closer, right? Both sides have come in closer to each other. This time it's different. They're targeting all three. Last time it was just GM. So it's probably a smaller impact to each OEM. But I think looking at the 2019 example, 6 weeks is probably a good barometer. We've gone from... Go ahead.
Who gets hurt most here? The manufacturers or the suppliers?
The work stoppage, it hurts the suppliers a lot more, right? Because the OEMs, ironically, get to keep inventories low and pricing higher, right? The negative is if this drags on and on for too long, then it does create a problem for everybody, not just the suppliers, because if it then becomes an affordability problem, now you can't keep car prices elevated, because then you get pricing actually coming down and volumes, then it starts hurting the car companies. But right now, it looks like the suppliers and not really the manufacturers. So far,
the strike has largely, I think, spared the final assembly plants of most of the big three, Stellantis, Ford, and GM. Is that likely to change?
It could. Right now we only have something like 20 to 25% of the U.S. workforce really impacted. It's interesting. You look at the U.S. sales numbers last for September. They really weren't hit that much. Neither was inventories. They actually ran up into August, and they were flat in September. So October, things should start getting. These will probably expand and get to more plants, maybe final assembly as well. But as we saw in 2019, there was a really quick snapback. We think the same thing will happen here. Dealer inventories are actually lower than where they were in 2019. So quick snapback, even if the strike expands further.
Anne-Marie, I'm bringing you in here to talk a little bit about strategy and the union's efforts here. Shawn Fain has been widely praised for how he's handled this amongst members and taken on the big three all at once, but trying to kind of do it surgically. That said, a little bit of his Twitter promotion for today's event kind of rubbed people the wrong way, making a Bachelor analogy and so forth. Talk a little bit about, I think because the strike's starting to bite, to Tom's point, the longer it carries on, there's a lot of people here who aren't bringing home what they're usually bringing home. Talk to us a little bit about the strategy from here on out and what you might expect to hear from him, both right now with his announcements and as this goes on.
Kelly, thanks for having me. Shawn Fain has been absolutely surgical in the targets that he is striking. We expect that to continue. He has so far hit different targets, and people say, well, how long will this go? When will this end? The surest sign that this strike will be nearing its end, in our opinion, is when he starts hitting the engines, hitting the trucks, hitting the big profit lines for the Detroit Three. That will be a game changer in this strike, and we haven't seen it yet. He's been holding his power. And
we have seen sometimes, numbers that the automakers indicate, okay, we offer 25%, we know whatever exactly it is. What should we expect the shape of a final deal to look like? What will tell you that maybe both sides are getting closer?
I think one thing's for certain, Kelly, when they get to a final deal, those higher wages that the UAW is being paid, that's absolutely going to trickle down to the supply base. We're going to see the employees in the supply base seeking those same price increases and rate increases. Where is that going to end up at the bottom line? Vehicles are going to cost more. Consumers are likely going to end up carrying the bill for some of this strike when all of this is said and done.